right, so are we ready? Are we ready for the session? Let us show of hand. Are we ready for the session? Are we ready for the session? Are we ready for the session? Someone is confirming whether we're ready for the session by a show of hand. A thumb up. You can use you try the reactions, the Zoom reactions as we wait for the rest. We expect more than 20. We expect more than 20 to be in this class. Are we ready for the session? Are we ready? Thank you so much, Nancy. Asante. Nancy Kirumbo, very ready for the session. Very excited to run today and see what Mwalimu has for her. That is very nice. So we're going to look at valuation of business assets. Some people say that we need to go deep in this. I remember clearly in our last session, for those people who are with me, we looked at some definition. And the first one was valuation. And we said that valuation, it refers to the process of determining the worthiness of an item. It refers to the process to determine or of determining the worthiness of a given item. We are trying to find what is the value of this item. Basically, we value items or financial assets and liability. That is what we value. Financial assets and liability. That is what we do value. When I talk about financial assets and liability, I can mention some of the items that we value are debenture. We value debenture. We value preference shares or preferred share. Preference shares. We also value the ordinary share. Ordinary shares. I can recall clearly that in our last session we looked at this debenture, valuation of debenture, and we said that we have two types of debenture. Who can remind me the type of debenture that we have? Somebody can remind me the type of debenture that we have. Somebody to remind me that type of debenture. We have two types. Give me the two types. Very important for me. For those people who are in that class, please remind me. You might not have attended that class, but you know the types of debenture. We have two types. Good that I'm reminding you that we have two types. Now, can you name them? Two types of debenture. Somebody. Can I mention? No, I don't like mentioning. I like volunteers. Redeemable and irredeemable. Thank you so much, Maurice. How I wish, when is the date today? 24th. How I wish the date was not in this corner. Maurice, you could have gained what? You could have gained something for lunch. I know we are approaching lunch, but don't worry. I know time is coming for that. Yes, we have two types of debenture. One is redeemable, the other one is irredeemable. It is good for an online student that I can get to know what you mean. For the physical student, they usually tell me deemable. They just say deemable. You just confused. What are they saying? Deemable. You say for the online, at least you are able to write down there. For them, they just say, you can see them. They are just there. You can see them. Now they say deemable. You ask them, what's the difference between irredeemable and redeemable debt? They say deemable is blah blah blah. See, But for the online, at least you are able now to write down and tell me we have redeemable and irredeemable debenture. Redeemable and irredeemable debenture. How do we differentiate the two? This just a recap as we move to the next part. Just a recap as we move to the next part. When we talk of redeemable debenture, these are debts that have maturity period. They have what? Maturity period. So after a certain period of time, we're going to redeem them. We're going to get them back. We're going to redeem those debts after a certain period of time. So if you see a question talking of a bond of 5 years, that definitely is a redeemable debt. For the irredeemable debt, the interest is earned forever. Interest accrued forever because it does not have specific period. There's no sound. How can that be? Techno. Let me see whether Techno has joined the way it is required. Techno, you have not joined the way it is supposed to be. Please log out. Somebody to write down there in the chat box, tell Techno to log out, and then when joining, tell Techno to join with sound. Cellular network. Somebody type down there, tell Techno to log out and then join with sound. He cannot be able to hear me because he joined without sound. He joined without sound. Thank you so much, Maurice. Yes, we have infinite timeline. That is forever, perpetuity into perpetuity. So for the irredeemable debenture, we don't have what? Specific period, or we don't have period. The interest is earned forever. Techno, log out and log in with sound. Yes, Asante Maurice, Asante. Now, today I don't want to go back to these. The irredeemable and redeemable debenture. I want us to look at something new today. I want us to go to the next one. Preference shares. The preferred shares. Class, the way we treat or the way we treated the debenture, the way we were computing the market value, the intrinsic value of the irredeemable debenture and redeemable debenture is the same way we do for the preference share. In fact, preference share still we have redeemable and irredeemable. We have redeemable preference share and irredeemable preference share. The difference comes in when it comes to what? When it comes to the cost or the required rate of return that we use. For the preference share is different from what we did for the debenture. For the debenture, who can remind me the required rate of return that we were using? What were we using? Somebody who was in that class, who was privileged to attend that class. If you're not privileged to attend that class, I'll make sure that the video is uploaded, and you'll be able to revisit. I'll make sure. Who can remind us the required rate of return that we were using? That is very important for me. As far as the computation of the intrinsic value is concerned. Technology, okay. Can I see? Somebody who can remember. So, for the sake of irredeemable debt, debenture or debt, whichever, irredeemable. This has no period. Therefore, if you want to get the intrinsic value of this, it will be given by interest divided by KD. Why am I saying KD? KD is the cost of debt. KD is the cost of debt or the required rate of return. In other words, examiner will give you YTM. YTM standing for what? Our KD. So if you find the examiner giving you YTM, yield to maturity, please use this as the KD. Use that as the KD to compute what? The intrinsic value of the bond. The intrinsic value of the bond. And remember, this is for the irredeemable debenture. This is just a recap for you to understand how do we compute the intrinsic value of the bond of the irredeemable debenture. Irredeemable debenture. Good. What about redeemable debenture? These are debenture which have what? Have maturity period. Which have maturity period. Which have maturity period. Redeemable. Recapping so that we move to our redeemable debenture. Class, please note this. Very important for us. Intrinsic value or the market value, the fair market value, intrinsic value or the fair market value of the bond, market value of the bond will be given by interest or the present value of interest times present value of cost. This will be what? Under annuity. This interest will be earned each year, and it will be similar. So KD and years plus redemption value. And the redemption value, I want somebody to tell me, for the redemption value, we want to redeem at the end of the period. We want to redeem this amount. Is it a lump sum or is it an annuity? Somebody. I'll not be able to continue if you don't answer that. It will be difficult for me. At the end of the maturity period, will it be a lump sum or will it be an annuity? Thank you so much, Paulo. Thank you so much for that. Yes, at the end of the period, it will be a lump sum. Then, if I want to get the present value of the lump sum, which factor do I use? Which discounting factor do I use? Is it PVFA or PVIF? I understand you have tackled the time value of money topic, and everyone is having an idea regarding the time value of money. PVIF, thank you so much, Paulo. Thank you so much. Paulo, are you in our classes? Are you enrolled? Asante, I like that. You multiply by PVIF. That is getting the present value of that redemption value. Asante, Maurice. Paulo and Maurice, that is a good job. That is good job for you. Now, this is it. For the redeemable debenture, or the debenture that has a maturity period, this is the formula for getting what? The intrinsic value of that bond. The intrinsic value of that bond. Or the fair market value of the bond. So you look at the present value of the interest, and this interest, if you thought that this bond has 5 years, that means year 1, you'll be having interest, say maybe 50. Year 2, you'll be having interest of 50 because the interest rate is the same. So what we're saying here is now these are annuity. Annuity, it is uniform cash flow. Annuity is uniform cash flow which are similar. So every year we shall be having interest of 50 up to year 5. Interest of 50 up to year 5. And that's why we are using PVFA to get what? The present value. We're using PVFA to get the present value. But for the redemption value, it will happen at the end of the 3rd year, and therefore we use the PV. Is that recap helpful? Is that recap helpful to you? That is just recap. I want us to go to the preference share. Is that recap for those who are joining maybe Zoom for the first time, or those who are just joining us for the first time? Our communication is Y for yes and N for no. You don't agree with what Mwalimu is saying, you just type N. If you agree, just type Y for yes, so that communication inakuwa rahisi na tunaweza kuelewana. So are we together? Are we really together? Oro, sawa? There are very many here. Like to get a signal. Mase asanti, Nancy, asanti, asanti. It will not be a surprise to get question of the same feature in your paper. It will not be a surprise. It will not be a surprise. Not be a surprise. And this concept is very important. It is the concept that has disturbed very many people. It has disturbed very many people. So it's good for you to understand. Good for you to understand. Sometimes the examiner will tell you that there might be a conversion. There might be a conversion. There might be a conversion. There might be a conversion of the bone. Instead of it being redeemed, it will be converted. It can be converted to another security. So if there will be a conversion, the value of the conversion value should always be higher than the redemption value. The conversion value should always be higher than the redemption value. And then it is the one to be placed where the redemption value is, and it is taken as the ceiling value, the higher value. And then the redemption value is taken as the lower value, the floor value. The floor value. Class, that is it. That's just a recap regarding the debenture. Let's look at the preference share. And before I forget, I don't know whether you people, you have seen the college is having some offer here and there. So this offer, if I forget, I'll not be doing good to you. Offer. So for those people who are doing the CPA 80D, we have offer for those units. You just pay 4,000, and we allow 2 installments per unit. Nikisahau hii itakuwa noma sana, juu sitakuwa nimewasaidia. This is important for you. This is very important for you. You allow 2 installments, and those people who are taking retake, for the retake, you just pay 3,200 per unit. And our payment detail, pay bill is here, 62 42 839. Account number, why can't you put? And then I have another good news for you. Hey, the intermediate level student nowadays, at least you are favored. This is the unit name. Kama ni FM, kama ni FL, naweka tu hapo, itakuwa tu sawa. And then you forward your message to this number. 0719 525 pounds. Forward your message to 0719 525 pounds. Alternatively, if you get that 0719 is busy, you can use 0793 555 000. Once you do that, you'll be in a position to be added to our paid WhatsApp group, where you'll be getting the link, and then you'll be connected to our learning management system, call it LMS, learning management system, where you'll get all the previous videos and notes, Therefore, you'll be in a position to cover and get to the position where others are. I thought this offer information is important for you to note. For those people who are taking financial management and financial reporting, we know that these papers are very tough. I cannot tell you that they are not tough. These papers, they need dedication, they need commitment. And that's why, as RCM, we have decided that we shall go with your preference. So we having early morning session. Early morning session. I've mentioned two units, an evening session. Sasa mwenye anasema ati mimi sisomagi juu ya timing, kuna hii yako sasa. 5 a.m. to 7 a.m. Haya. 8 p.m. to 10 p.m. Sasa who is that? Who is that saying that I'm not able to study, I'm not able to complete this tough thing, the CPA, because of timing? Their timing is not good, you see? Now we have you covered. You can choose the session that suits your schedule. If you need early morning, you can come. If you need evening session, it's available. And this is for 2 units in the intermediate level: financial management and financial reporting. Hizi paper mbili, there was a student who was saying that mimi nilisema nijisomee kwa sababu hizo niliona ni kama nitapita. After that, after amefanya mtihani, you know what happened? Mpaka zile zenye alikuwa anasema ni theory zilibebwa, kwa sababu hizi paper mbili sio mchezo. You need at least someone who is coaching you, giving you assignment. You know, you cannot give yourself an assignment. How? You cannot give yourself an assignment. Then you need discussion groups. When you join us, you get those groups, you mix with your colleagues, you discuss with your colleagues, and you'll be in a position to pass this paper round one. Tunataka muende advanced level, tumalizane na business data analytic, tuende tupromotiwe kazini like that. Mambo na maisha iendelee. Therefore, if you want to join us, you can contact us. Remember, we also have other units, but zenye ziko na 2 sessions. Session za asubuhi na jioni ni zile mbili: financial management and financial reporting. We shall introduce others as the time goes by. Maybe before we move to our preferred share, is there any question regarding that information? And we want you people to join, because this one has a deadline. Deadline is next week, Monday usiku. Any question regarding that? Any question? Nani akona swali regarding that? I just logged in. Oh, Christine, you just logged in. Asante, karibu sana. We're just reminding people about the offer that is currently available. For the CPA ATD. Let me to put this CPA ATD. If you are doing the retake, this is for the retake, by the way. I have to indicate this is for the retake. Anyone who is retaking here, it's not a sin to retake. This is for the retake. No more. Yeah. What do you mean by 1 to 5? Nimeona swali. What do you mean by 1 to 5, 2 to 50? Where is that? 1 to 5, 2 to 50. Where is that? Can somebody help me here? Christine? Where is 1 to 5, 2 to 50? This is 5 a.m. to 7 a.m. Oh, I just love. Oh, that was a question. That was a. It was just a formula. Yeah, it was just explanation of debenture. Thank you, Paulo. Thank you. Yeah. Sorry that you have missed, but whatever that we're going to cover here now, I'll mention something regarding debenture for the sake of those who have joined late. I'll just mention. So don't feel that you have lost. No, I'll mention that. So let's continue. Let's continue. Let's continue. Let's continue. So class, when we talk about the preference share, I know you know where it falls. Preference share, know where it falls. It falls under equity. It falls under equity, and that's why we're saying all that we value is the financial assets and liability. Financial assets and liability. Financial assets and liability. Now, when it comes to preference share, what is the return? What is the return of the preference shareholder? Somebody, Saka, you mind to be out. I want you to think outside the box. What is the return? The return of the debenture holder is interest. What about preference share? Hiyo ndio tu tricky kwa hapo. Ukishaelewa hiyo, you good to go. Preference shareholder, what is their return? I'm just giving you some time to think aloud. Fixed dividends. Fixed dividends. Asante. Poro and Catherine. This is Catherine. Yes. Thank you so much. Thank you so much. By knowing that, it will become easier for you to solve any question regarding the preference share because it takes the steps of the debenture. It takes the step of debenture. The only thing that you need to understand is what is the return. Now, we say that we have two types or category. Redeemable and irredeemable. We have redeemable and irredeemable. Of course, preference share. Preferred share. Preferred share. And the return, as they have told us, it is return is the preference dividend. Muhimu sana, preference dividend. Presented by what? PD. Preference dividend. And then the cost of capital is what? Cost of preference share. Cost of preference share. Or the required rate of return. Cost of preference share. Which is KP. Wow. Having known this, you will be in a position to compute anything that examiner may bring. Anything that examiner may bring. In the first case here, let's start with the irredeemable preference share. Irredeemable. Redeemable preference share. As usual, these are preference share which they don't have maturity period. They don't have maturity period. We expect this preference dividend to perpetuity, to infinite. It has an infinite what? Timeline. Therefore, how do we compute the intrinsic value? How do we compute the market, the fair market value of what? Of such a preference share. Simple. Market value, you can just say market value or intrinsic value. It will be given by preference dividend. Preference dividend divided by the cost of preference share, the KP. Allow me to just use the KP. Yes. Examiner will give you an illustration. For example, let me check an illustration here. We do it very fast. We do it very fast. Very fast. Now, I know those serious students are writing down, so you can have this can have this. By the way, I will give you, remind me before we end the session, I will give you the timetable for the morning session. I'll give you the morning session timetable. The morning session. So we have this question for us. 8% irredeemable preference share. Question. 8% irredeemable preference share. 8% irredeemable preference share with a par value of 200 shilling. With a par value of 200 shillings. With a par value of 200 shillings is to be issued by Abdul Limited. Is to be issued by Abdul. Abdul is a very great man here. Abdul Limited. Abdul Limited. If the cost of capital is 16%, if the cost of capital is 16%. Calculate the intrinsic value of the share per share. Calculate the intrinsic value per share. As usual, I allow my student to think a bit. Please, and you think a bit and tell me what is our intrinsic value of those shares per share. What is the intrinsic value per share? What is the intrinsic value per share? Of course, I give you 1 minute. As a student, you should be having a book and a pen, as well as what? A calculator. Ukuwe na hizo vitu tatu. What is the intrinsic value per share? This is very interesting. Aya, test your mind. Oh, Christine also told us dividend. Yes, dividends. Asante, Christine. Asante. And for the sake of Christine, we said, now if we are looking at the intrinsic value of the debenture, here, debenture return is interest. So here we shall be having interest over KD, cost of debenture. As simple as that for irredeemable debenture. So zinaandamana, change to me what we're getting and the cost that asset is giving us. Watu bado, who is attempting this now? Good. For the interest of time, we're going to do it together. I know you help me to calculate. This is who? Vic ananipatia 100. Maybe there's somebody else who is trying this. Aya, wacha tuone. Nikwambia kiberebere itakupeleka mbele. Poro 100. I think I need to invite these people. These people are in different locations, but they are giving us the same thing. Let's do it. Intrinsic value. Is given by preference dividend. Divide by what? Divide by the KP. Preference dividend divided by the KP. So how do we get the preference dividend? We are told that it is 8% irredeemable preference share with a par value of 200. Therefore, it is 8%. To get preference dividend is 8% of 200 divided by KP. It is the same as the cost of capital. Divide by what? 0.16. Hii ajui itanipatia nini? What is 8% of 200? 8% of 200. Christine Asanti. Christine seems to be a very sharp student. Just joined and she's doing great. Thank you, Catherine. Catherine anatuambia hapa ni 16. Divide by 0.16. Divide by 0.4. Exactly. This is 100. This is 100. This is Kenya shilling 100. Kenya shilling 100. The intrinsic value or the fair market value of this preference share is 100. Is 100 shillings. 100 shillings. 100 shillings. Are we together? Are we together? Tuko pamoja. Tuko pamoja hadi hapo. Before we move to the other one for the redeemable. Are we together? Are we together? I know people are trying to synthesize. So know the terms that the examiner is using. Sasawa. It is always good to know the term that the examiner is using. Cost of capital. What am I dealing with? The preference share. Good. Now, what will be my KP? It is this cost of capital. Cost of capital. Cost of preference share. Sasa, capital in this case is our preference share. It is very, very interesting. Very, very interesting. I want us to revise this question. We say that this bond has a certain amount of, has a certain period, and then we do it as what? As redeemable. As redeemable. And then we see. But before then, you have to confirm whether we are together. You have to confirm with Mwalimu whether we are together. Are we together? Are we together? Are we together? Vika Sante. Sante. You see, if people got it, you got it. You got it. That's very good. That's very good. Asante Poro. We are very many. We are very many. Just typing yes. Kama hujaongea kwa hii class, just type yes. Why for yes? Why are you fearing? You should not fear. You already joined. You're already in. Then contribute something. Contribute something. Don't just be there. There are very many here. Are we together? Are we together? I need to get like 5 yes. Those are enough for me. Those are enough for me. Are we together? Up to that point. Kuna mmoja anasema anakazia examiner. Hapana, examiner usimkazie. Hapana. Usimkazie. Usimkazie. Is there any question regarding what you have done? That's what I'm asking, indirect. Is there any question regarding what we have done? Or we are good to move to the next? Are we good to move to the next? Why for yes? Are we good to move to the next? Taka twende kwa redeemable. We see how do we treat it if it is redeemable. Asante, asante, asante. Good. Now, this 8% irredeemable preference share, I want us to put it as redeemable. 8% redeemable preference share with a par value of 200 is to be issued by Abdul Limited in the next 5 years. The next 5 years. And the other things to remain constant. The other things to remain constant. Limited in the next 5 years. So this is now 8% redeemable. Redeemable preference share with a par value of 200. The par value of 200. Or I can change this par. I can change to 400. No worries. No worries. Yes. The cost of capital rate to remain to be that way. And then the n, where n, let me just put n is here, where n is equal to 5 years. This one class make it or strengthen our redeemable preference share. It's redeemable now. It will be redeemed after 5 years. It will be redeemed after 5 years. We have everything at price. Now, how do we compute the what? The intrinsic value per share. Simple. It's simple. Intrinsic value. It will be given by present value of PD, preference dividend. Preference dividend. Dividend. Hiyo ndio return times PV for PV for KP and years plus redemption value. Kuna kitu mwalimu huja mention. How do we get redemption value? How do we get redemption value times PV, KP and years? How do we get redemption value? Noted from today that redemption value is equivalent. Redemption value is equivalent to the par value. Redemption value is equivalent to the par value. Now, can you tell me what is our redemption value in this question? Somebody, nataka stick kwa our mind. What is our redemption value in this question? Somebody who is clearly following these will definitely tell us what is our redemption value in that case. Somebody who is keenly following can identify our redemption value. Ball to your side, ball to your side, ball to your side. Big Asante, big Asante. Yes, you can see our par value with a par value of 400. 400, Asante Catherine. Yes. So the redemption value already we have it there. Redemption value already we have it here. Now what can't we replace? We replace everything here. We replace everything here. We say that our intrinsic value will be given by preference dividend. How do we get this preference dividend? 8% of our par. 8% of par. 8% times par is 400. Whatever that we get there, we multiply by PV FAR, KP, and years. Formula ya PV FAR, KP, and years. Don't ever forget, when computing the present value, it is 1 minus 1 plus R, 1 plus R. What is our R? What is our R? Our R in this case is KP. That is the cost of preference share, which is 0.16. 0.16 raised power negative 5 year 5 years here, divide by R, which is 0.16. And with that, I'll be good to add the redemption value of 400 times 1.16 raised power negative 5. Kuna mtu hajajua kwenye nimetoa, 1.16. Kuna mtu hajajua kwenye nimetoa 1.16. Can you help me understand where I've gotten 1.15, 1.16? Somebody help me understand, or help somebody in their meeting to understand where we gotten 1.16. 1 plus R, 1 plus R, 1 plus R. Asante Vicky. Vicky, you must be good in this day. You must be good in time value of money. You must be very good. I salute that. Thank you. Yes. PV formula is 1 plus R raised power negative N. This is what we've done. So our R is our KP in this case, which is 16%. And that's what we have translated in that. Asante. Thank you, Catherine. Asante. Now, we have to sort out this. Do I really have my calculator with me? Because I need to know what will be this one. Somebody to give me 8% of 400 first. Tuanze na hiyo. 8% of 400. 8% of 400. 8% of 400. 8% of 400. 32. Asante. Times. Who can give me this PV FAR? unless I pick my calculator, or I can use a table. But please, if you have a calculator, tafadhali give me that. Give me that PV farm. Instead of me looking at that table and such. Give me that. Can use a table. PV for 16%, 5 years. Somebody? Oh, let me check my table so that we're able to assist each other. Probably you don't have a calculator, but you must overcome. You're overcomers. You're overcomers. PV4. Nani chapa hiyo? Nani amechapa hiyo? I need firm. Good morning. Nani amechapa hiyo PV4? I need a table. I need bado hajapata. Probably wengine wako kazini without a calculator. No worries. Just relax. Upate hii table. Remember, the table is at the end of the last page of every paper. Every financial management paper and advanced financial management paper, we find those tables. So I'm looking at a past paper here so that we're able to look at it. So give me some time kidogo too. Somebody be giving me also that one we need to raise to power. But there are those people with machines, the whatever. If you have your machine near, you can use Excel and give me this. Excel. Naweza tumia Excel. Ama wale wa simu za nguvu. Like somebody like who? Acha nione watu wa simu za nguvu hapa. Wiki ni moja. Steve Dora. Steve Dora, you cannot manage to tell us that you don't have a strong phone. Steve Dora, you can help us to get that. Oh, my paper is loading now. It's here, almost here. Is it 1.58? Okay, let me confirm. It is 16% 5 years. 16% 5 years. I'm almost there. Financial management. Now I'm looking at financial management paper. Financial reporting, financial management. It's here. 1 minute now. Steve Dora ataki kutusaidia. Barari. Now we need Sophie. Okay, I'm just there. I'm here now. I'm happy. Table number 2. So niende kwa 16% and then 5 years. 3.5 years. 5 years is I'm getting 3.2743. 3.2743. I know you know how to use your table. Plus PV table ya kwanza sasa 16% 5 years 0.4761. So it will be 400 times 0.4761. Now that is easy for you. You can give me that using your calculator. Now can you give me this? Is equal to, then use your phone. Oh class, our class was just meant for 1 hour. How is it adding now? It's adding too fast. 32 times 3.2743. 3.2743. 43. 104.78. 104.78. 2 decimal place plus 400 times that. You can give me that. You can confirm with me. 400 times 0.4761. 190.44. 190.44. Haya, acha tuone 190.44. Sasa nikiwa na hiyo naongeza hizo mbili. 190.44 plus 104.78. 295.22. Asante Polo. Asante. Yashire 295.22. That is the intrinsic value of the bond, of the redeemable preference share. The redeemable preference share with a par value of 400. The par value of 400. The par value of 400. Good. Class, I can see our time is up. Our time is up. We're having 2 minutes. It is my pleasure that you attended our free class today. We cannot take that for granted. I know you have sacrificed your time to attend. I wish to stop at that point unless there is a question. Unless there is a question. Do not forget to inquire. If you need to enroll with us, please don't forget to inquire. 719, 525,000. 525,000. 719, 525,000. This is 93. 793, 555, 000. Contact these ladies. They will be in a position to assist you. They will be in a position to assist you. Otherwise, class, allow us to stop at that point until next time. Until next time. Asanteni sana na mkuwe na weekend poa na Mungu awabariki. I've been your lecturer, Steven. Asante. Goodbye. Thank you, Poro. Asante, Christine. Asanteni sana. Asanteni sana. Asanteni sana. Asante, Nancy. Asante. Thank you, Catherine. Thank you so much.